Hey everyone, it's Kirk here again from Option Alpha, and I just wanted to do some quick video analysis of where stocks are right now. The S&P just barely cracked above 1250 today, which I think is pretty important on a long-term perspective. And so what I wanted to do is just first, before I go over a bunch of things, namely the VIX, the S&P, crude, and I believe I'm going to try to catch some of these muni bond stuff that we've been kind of looking at recently and talking about on our Facebook page as well. But I wanted to reference back to this particular post, which someone had talked about on another blog and reference, and I actually had for a little bit forgotten I even wrote the post, but it was back in October of 2010. So beginning of October, and I just had some long-term thoughts for the end of 2010 and the beginning of 2011. And I guess you can more or less see my chart right here of where I thought the S&P would end up. And here was October where my cursor is. And so I really did think that the market was going to continue higher and really continue up into the area of around 1250. And you can see that just barely here on the chart up until around 1250. And then what I called after that, the long and painful move lower, which I don't think is going to make the market crash. And I still don't believe that. I think that just breaking above these highs is actually the best thing for the market and is going to really suck the market into a false sense of bullishness. And then the market's going to continue lower over the next year into 2011 and really kind of capitulating here at the end of 2011, 2000, and heading into 2012. So if we go to actually a chart and see where the market is now, let's see how right I was. And I think I was pretty right on with my analysis. And this is the same chart of the S&P here, and the chart here in green is actually the time since October 8th. And this is where I thought my analysis was. So again, I can see that, or you can see that I was pretty dead on, and I thought the market would continue higher, and now it's reached the 1250 level for the S&P. So I think that from here, it's going to continue lower as we start to break into 2011. And I think that 1100 is going to be a sure thing as we start to get into the summer of 2011. But of course, we'll just have to wait and see where things are at that time. To look at some other charts, I just want to throw up a chart of the VIX and the dollar index real quick. The VIX is at levels that we saw back in April and May of this year before the big spike lower, the flash crash. So the VIX is real low. Anything under 20 is really I guess, a warning sign for the bulls that, things are getting a little bit too complacent. The investors in the market are a little bit too sure of themselves and they're not pricing in fear accordingly. So the VIX being low right now, even with the slow trading in the holiday season here, definitely, gets me a little bit nervous about where the market could go from here. As far as the dollar is concerned, it's really having a tough time cracking back above this level. And I think that's going to be really important for the dollar to really not crack above that level and continue lower. Although I do want a strong dollar, I think that a weak dollar, I guess, is going to play into the equity market just a little bit. And I think that being right here at this Fibonacci line right now, I think that the dollar could show a little bit more weakness before it shows any more strength. So we definitely want to take that into consideration. The last thing I wanted to talk about tonight, and see if I can get the right ticker. Okay, there it is municipal bond ETFs. Now, I usually don't talk about individual ETFs and stocks on this chart because you guys know from now how I feel about that stuff and options trading. But I've had a lot of thought and been reading a lot of articles and a lot of research on municipal bond funds and particularly ETF municipal bonds. And this is actually the HYD. It's a high yield municipal bond index ETF and just baskets a bunch of high yield municipal bonds together. What I like about this, and I'll just tell you right off the bat, I think that shorting municipal bonds over the next 2 years is going to be a great trade. But what I like about this right now is that it's already taken a beating. And I do like that. I think that it's already taken a bath, and I think that that's great for this stock and continuing to short it. I don't think that there's much upside potential. I think it could get back up into the upper 29 range. But after that, I really think it's going to continue lower. So I think this is a really good trade for someone to hold on to, myself included, over the next year or two. I think that municipal bonds are going to have a heck of a time trying to make yield and trying to get out these premiums. So I think this is a really good one-off trade that you could start to make and kind of hedge your bets against any, downside in state and local government funding and debt levels. So that's a great suggestion on my part. And as always, I hope you guys enjoy this video and happy trading.